Is the 5% interest rate a good thing for agents to be making claims to in this year in 2024?
Unless you forecast the 10-year yield and try to find channels, giving a one single mortgage rate variable is crazy. That's not how it's done. So you have to follow kind of where you think the bond market is going, because it's, I always say this, the 10-year yield and 30-year mortgage rates, they have been slow dancing. They are a love couple since 1971. So where you actually think the 10-year yield will range is where the mortgage rates will range. Unless you're a bond trader or someone that tracks 10-year yield, you really shouldn't listen to anybody on mortgage rates unless they give you like a forecast range. And that's been my thing. When I started incorporating these in my forecast in the last decade, I try to give people ranges, and then every single day we go over what's going on and what drives it. And it's really Fed expectations, inflation expectations, the macro data. These things actually drive mortgage rates in the 10-year yield. Of course, the spreads are really bad right now. But the case, if you had to ask me 5% mortgage rates, how do you get there? Okay, the labor data gets weaker, the Fed has to pivot, and the spreads have to get better. And then in that environment, if the 10-year yield gets below 3.21, you got 5% mortgage rates in that scenario. So when those things occur, then you can move into that direction. But none of that is happening right now. So maybe over the time that, the labor data gets softer, the 10-year yield goes down. I'm not a Fed pivot person. I don't believe the Fed has pivoted yet. The things aren't in place. And like going on the tours last year, I realized that everyone was told that the growth rate of inflation falling, the mortgage rates should follow 1-to-1, and that's mortgage rates should go lower. This is why we talked about this, the Gandalf line. Like I literally last year, January, I was like, listen, we are pretty much at the low level of where mortgage rates should be. So I believe in this, that I'm going to bring out Gandalf the Grey. People are like, what the hell are you talking about? And I was like, you shall not pass.
You shall not pass!
Like, we're not going to break this level right here. And kept on getting tested, and didn't break. So I just think that I'm suspicious of people forecasting rates if they've never forecasted bond market stuff ever in their life.
Your range that you have a projection every year of where the 30-year fix could be, and it's a pretty wide range. So does that speak to how much volatility could happen in this year?
I mean, you have ranges every year, and after COVID, the volatility in rates is much higher now. So we adjust to that reality, and that's why the ranges are like, for example, this year I said 4.25 on the 10-year yield top, 7.25 mortgage rates peak. Okay, so we're above 4.25 right now. Mortgage rates aren't at 7.25, so the spreads are better. So we try to explain that to be the case, right? Mortgage rates are lower than I thought because the spreads are better. And then every single day, every single economic report, every single Fed talk, we try to get people to where they're going to go. And really what happened last year is that if you look at the history of economic cycles, whenever the market believes the Fed is done and the Fed believes it's done, it usually has this big rally in the 10-year yield and mortgage rates go lower. That's what we saw last year. And we got down to a level that on the 10-year yield at 380, I thought, okay, we're going to be testing this level. It's going to be hard to break. We've tested it twice and we're kind of back and forth here or there. So I believe that's a way too complicated topic for most people to talk about unless they track the 10-year yield and mortgage rates religiously, which means you've got to be a complete loser like me. So everyone has a life. So I'm just doing what I do. I don't do anything else. And I think it's suspect if people target a single rate without putting all the variables in it.
Since April, we have uploaded new and sought-after courses, content, and tactical assets for your business into the BAMX platform. Not articles behind a paywall that only pontificate to you what you should think and do, but education that actually shows you how to do what you need in today's market. Every day, we continue to add more content into BAMX and our private Facebook community. Content that works. Content that our members have exclusive access to daily. It's why over 1,500 of you and climbing have joined us in BAMX. It's also why tomorrow's price is guaranteed to be higher than today's. That's called inflation. Do not wait any longer. Use code Byron and join the thousands of agents taking their business to the next level today. Code Byron for 10% off. See you in BAMX.